Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon live webinar series. Before we get started, let's take a look at the shared disclaimer, and please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows and webinars, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonic to the stage. How you doing, Dima?
Good morning, Will. How are you?
Get your screen up. There's the beautiful Market Chameleon landing page.
Good morning, everyone. And what we'll do today is take a look at our put screener again, and we're going to look for large trades, and then show how we could quickly kind of get some insights and analysis on some of these larger trades that traded during the day. So first, let's navigate to the put screener. On top, main menu, where you see screeners. We're going to look at the bull put spread screener. So we're going to click on that. This will take us to our bull put spread screener. You could see we have our filters above that we could tab through. And then we got our table below with the analytics and the data for different combinations of put spreads. By default, we have the expiration selected to the next monthly. So you could see here, if you click on it, you could change it. We're going to stay on that November 21st expiration for our example. And also we have spreads with strikes maximum of $5 apart. And in our example, what we want to do is take a look at, in this particular expiration, if we could find the largest put spreads that traded on the day, given these parameters, expiration, max $5 apart. And then we're going to take a look. Once we detect those, we're going to use the screener to get quick insights and using the analytics and metrics. So first, let's go to this tab where you can see we can tab through these data elements. We're going to click on volume analysis. And this volume analysis, what it does is, if we go from left to right, you can see here, this is NVIDIA. This is the spread we're looking at, November 21st. It's on the 200 strike, buying the 195 strike. And then we have the volume on each strike, open interest, and all the way to the right, if this spread actually traded, if there were actual trades where multi-leg order came into the market, got printed on the tape, we detected it, assembled it, it'll show up in here. Okay, so if we didn't detect the trade in a multi-leg trade that looked like there was a spread, this would be blank. If we did detect it, we get these analytics, the number of times it traded, total volume, the last time that we saw the trade, the VWAP price, the bid and offer at the time, and the reference stock price. Okay, so if we click on this volume, this will sort us, lows to highs, highs to lows. So if we click on it right now, it's going to resort all of them. So right now it's from the lows to highs. So click on that again. And then now we got the largest volume, you see, going down. So this one, 88,000 contracts, involved a trade that happened at 11/24/01. The spread was the November 21st, 232/230 put spread. Okay, so the 232/230 put spread, so $2 put spread in November 21st expiration. We could see that there's a lot of option volume already in these legs, right? 57,000 on the 230 strike, to 101,000 on the 232 strike. Large open interest in each one. Total of 88,000 contracts. So 44,000 in each leg. And if we go further, we see that the VWAP price was 46 cents. So it traded at 46 cents. Right now, the market price is 39 cents. So that's the market bid, right? So you could see that it's lower. The bid is lower than where it traded. The bid and offer at the time was 45 cents, 51 cents. So you could see traded closer to the displayed bid, indicating that most likely there was an incoming sell order where the market makers or someone stepped up a penny. That's the inference. And the price of the stock at the time was $241.76. So you could see that it closed higher, $243.34. And that's why this put spread is worth less, right? So when we look at put spread, selling the higher strike, buying the lower strike, and if the stock goes up, then the put spread is worth less. So now that we kind of got an idea of what happened, when the put spread traded, where the stock was at the time versus where it is currently. This is looking at Friday's closing prices. We're not open yet, so today everything will start updating with new data. But as of Friday, we see what happened at 11:24. This traded. This is at end of day. The stock went up. The put spread's worth less. And now let's take a look at what kind of metrics and benchmarks we could look at to see the valuation of this put spread. Is it on the high end, low end of the historical range, the success rate, the different payoffs. So if we come over here to the summary, right, we see that currently the bid is 39 cents. So you get credit of 39 cents if you did it on the market prices. In theory, if we looked at historical stock moves in IWM with similar conditions, our theoretical price is 39 cents. So we could see it's right there, or on our theoretical price based on the using historical stock return distributions. Historically, if we also looked at similar spreads and based on stock moves, given the time span till expiration, what is the theoretical win rate or success rate of similar spreads? Applying those historical stock moves, and that's 80%. Okay. Also moving, this is the spread. It's just repeating what we're analyzing in IWM, the November 21st, 232, 230. The max loss is $1.61. So if you're risking $1.61 to make 39 cents, that's if the stock is flat, actually, then you got a 24.2% return, right, on the amount at risk. And you also have some downside cushion. So this is out of the money since the stock is $243.34. But you're selling the 232, buying the 230, but the strikes are below the current price. So even if the stock comes down, right, from 243, these puts are not going to be in the money until it goes below 232. Or 230 for both of them to be in the money. So you have a 4.8% downside cushion for your break even. So if it goes up, stays here, we got a potential 24.2% return. If it goes down, you got about 4.8% cushion for your break even. Then below that, you start losing. Okay, so you got some, downside cushion there. Another thing we could look at is, well, is this theoretical value based on historical stock moves. What if we wanted to compare to historical implied volatility for similar options? So if we looked at the implied vols of similar options and how they've related to each other in the same circumstances, we're looking from days to expiration and so forth. Well, in theory, what would this look like? What would the theoretical value be on average? So we could go here, historical IV Theo, and this is another model. So this one's saying 37 cents. So it's a little bit above there with a ranking 75%, meaning historically, if we took the implied volatilities of similar options and created the spread, 75% of the time it was worth less than 39, 25% more. Okay, and we could open that analysis and read it in here. I'm going to close it for now. And here we got more stats. So if we look at the IV Theos, these are the ranges. It ranged from 28 cents to 61 cents. So right now it's 39. So that's min and max. If we looked at the historical ranges, the median value, half of them above, half of them below, was 34 cents. So you could see that's 39 cents is above that. That's why I got the 75th percentile. This is looking at historically 503 observations. So the number of observations above 124, below 379. That's where we get the 25%, 75%. So now we get, based on the stats, we get the range, the median. So we could compare it to the where the market prices are, where the trades were happening, and we get this nice, perspective, quick perspective on the spread. In addition to that, we could just quickly look at the strategy payoffs. So I'm going to click on that. So again, this is the same spread in IWM. And here we have these different scenarios. What if the stock went down 1 standard deviation? What if it went up 1 standard deviation? What if the stock was down based on a seasonality move? Average seasonal down move, average seasonal up move. What about just an average move up, average move down? Or if it just an average move, if we average out all the moves historically, and what would this spread look like? So you could see that it stands to gain 24.2% in all these scenarios. But if on a seasonality move down, you would lose 100%. In other words, whatever you have amount at risk, that's what you would lose. If we're down 1 standard deviation, also you would lose whatever amount you have at risk, which we saw was, coming back to the summary, was $1.61. All right, so I think, I'm going to stop there, because what we did, we covered, how do we find some of these larger spreads that traded, and how can we quickly get an analysis and insights on the valuation, the market prices, the potential returns and risks, all from just one screen.
Yeah, that was a great webinar, D. Thanks for bringing this to the Chameleon community. Start of the week, so we have hopefully 4 more this week. With that, D, you have a great day, my friend. Thank you.
Thanks. You too, Will. Thanks, everyone, for joining. Stay safe out there and have a great trading day.
See you tomorrow, D. Thanks. Have a great, safe trading day. Bye-bye. Hey, everyone. Thanks for joining Market Chameleon for another live webinar. For those who are maybe here for the first time, remember, you can, or not remember, but you can go anywhere on the Market Chameleon site and start a free trial. Just give it a click. We offer a 7-day free trial. Also, today I am doing the After Hours show with Ryan Maestro, who has a great product, Options Robot, out there, and is a great communicator on the options markets, and he'll be going through some ideas after hours today live. Let me put the link into the chat. There's the link to the show. You can grab it on the YouTube channel. I will send out a reminder with an email. So everyone have a safe trading day, and hopefully we'll see you at 4:30, if not tomorrow at 9 a.m. Everyone have a great day.